All right, folks. Thanks everybody for coming. I'm going to give everybody just a few more seconds here, and then we'll get right into it. Everybody can hear me okay? Okay. Thanks again. Okay, everybody. Thanks again for joining us. My name is Patrick Zielbauer. It's 3 o'clock on Wednesday, March 15th. Appreciate everybody coming to this event today. I call this one Infinity Active Trader Bootcamp. For those of you who have been around for a while, we did a similar one last year. We got a good reply, and we're going to try to do this a little bit more often this year. So we're going to ask for a lot of feedback. We appreciate everybody's participation. Again, my name is Patrick Zielbauer. I've been an associated person of Infinity Futures since 2004. It's the only firm I've worked with. Came here right out of school, so going on about 13 years. And over that time, accumulated a lot of customers and a lot of knowledge about this business. And there are certain things that I hope to impart upon everybody here to help you keep you around. That's the goal. I know there's a lot of questions. This one is geared, mostly to our existing client base. So for those of you who are guests, so to speak, who don't have an account here, obviously you're getting a little bit of a peek behind the curtain, so to speak, but we really want to take care of our existing customers today, so we're going to answer as many of these questions as we can. And let's just get right into it. I'm going to run through a few basic things here, some risk, and then we'll proceed. And it is going to be recorded, correct? Okay, trading futures, options on futures, and retail off-exchange foreign currency transactions involves substantial risk of loss and is not suitable for all investors. You should carefully consider whether trading is suitable for you in light of your circumstances, knowledge, and financial resources. You may lose all or more of your initial investment. Opinions, market data, and recommendations are subject to change at any time. Past performance is not indicative of future results. So folks, you've seen this disclaimer everywhere. That's because it's required, but it's also very, very important. Only fund your futures account with risk capital. That means money you can afford to lose without lengthening your retirement horizon or affecting your lifestyle or the ability to pay your bills. If you have any questions about where you might fall on the risk capital curve of things, or if you're not sure if this is appropriate for you, please feel free to reach out to your rep in our office or our management. We'll make sure to have a conversation with you objectively about risk and whether or not this is appropriate for you. In addition to that, be very careful with things like day trade margin. This is something we talk about all the time. You see it on our emails and all over the internet. Even if you use full margin per contract, you're still using a lot of leverage. Okay, so when you use day trade margin, you do dramatically amplify your leverage. That's something you really want to be aware of as well. All right. Okay, so just a quick little run through about Infinity. Who we are, why we're still here, and I want to remind you, those of you who are existing clients of ours, why Infinity has persevered this long. Infinity is what's called an independent introducing broker, IIB. Established in 1995 by Jim Mooney, who is still the president of Infinity, who is the one who hired me when I was in school. So that's going on 21 years. That is an impressive number in our business. For those of you who have been trading for a long time, you know that the industry has contracted a lot as a result of the market crash and all kinds of other things. The subsequent regulatory environment, as everybody knows, we hear about this all the time, is extraordinarily stringent and in some cases crushing, and it's driven a lot of our competitors out of the business. So Infinity has been left to compete with lots of firms that are much, much bigger than us and don't have the kind of flexibility we offer. And that's really something that has served us very well over the last several years. We're located in Chicago, Illinois. We have multiple clearing relationships, and Infinity is FCM owned and operated. We're going to talk a little bit more about this. It's a really important note. It's one of these things that is hard to explain in an email or a spreadsheet when you're trying to impart knowledge about how important that is, but we'll talk a little bit more about that. We have one focus, that is futures. We don't do really anything else. Electronic futures is the vast, vast majority of our business. And our flagship product over the years has evolved to be Infinity AT for order execution and Sierra Chart for charting, which we believe to be a phenomenal charting program, and in our opinion, the best program that is out there, and definitely the most improved program, especially over the last few years. We want to say thank you as well. Again, most of the people here are existing customers of Infinity. We can't thank you enough for sticking with us. We know that there's a lot of choices out there. You guys are getting hammered via email, phone calls. A lot of you have been with us for a really long time. You're talking to your friends about us in a positive light online. This stuff means a lot to us. The vast majority of our business comes through referrals. So we thank you again for your business and your loyalty. I want to touch on something that is really at the core of what sets Infinity apart from a lot of what the rest of the industry, so to speak, especially the firms that are not enormous. There's a little crude graph or diagram I made here, okay? And what I'm trying to get across here is that when you have an FCM owned and operated platform, that means that the company that is holding your funds also owns the software that you're trading on. It sounds so simple, but it's not that common in our business. On the graph or the diagram above, you see number one company is the clearing firm or the FCM. All right, so they're the ones in most cases holding your funds. They're the name on your statements that you get every night. Then you have another company who actually generates the statements. That's number two. And then there's a third company who provides you the data feed. And then there's a fourth company who might do order routing. And then there's a fifth company who is doing your trading platform. So these are just the ones you see. There might even be more behind that. And the idea here is that when something goes wrong or there's an issue, instead of it getting resolved in a way that you would expect, where one company is managing its own stuff, in this case you get a lot of finger pointing and you get different companies blaming each other for stuff. This is something that we've been through in the past, years and years ago, when we used to use lots of third-party platforms, and there's a lot of them. Some of them are still around today, not many of them, but some are. We would run into these issues all the time. It's a really horrible and helpless feeling for us and our customers to be stuck in an issue where, whether it's resolved or not is not at all under our control. That's a really terrible position for any business to be in and its customers. So one of the things that we really like about our setup here is that Transact owns Infinity. Transact, which is the FCM who holds the funds, owns its own statement generation technology. It owns its own data and order route and the front-end platform. So that Infinity AT Dome that you're using is owned by the FCM who's holding your money. That means if there's an issue with something, we already know it's ours. That really means a lot when it comes to single point of contact support and issue resolution. It's a big deal. If you're sim trading, if you're only practice trading, it really doesn't matter that much. But when it comes down to real trading, we believe this to be a significant leg up around the rest of the industry. There are a couple other companies that have a similar model, but they're enormous and they have no service, no flexibility with the leverage. We're talking about firms like TradeStation, Thinkorswim, some of these big firms where futures are very much treated like a side project. Those companies do have a similar model where they have their own platform, but their service and their flexibility and the things they can do it's not really there the same way it is here. And some of the other more boutique firms who are like Infinity, where they are able to pick up the phone and offer you personalized support and so on, they don't have their own platform. So in the background, they're calling someone else or 2 or 3 other companies every time you have a problem, and that's why they tend to not resolve issues in a timely manner. So we believe that Infinity is a unique firm in the industry where we have an FCM owned and operated software, and we can do single point of contact support and still be flexible with our customers in terms of their needs. So we believe this to be an important factor, and that's really why I wanted to focus on that. All right, so what are the 3 things you can do to get the most out of the account you have here with us? All right, you need to understand the dome, you need to understand the charts, and you need to understand our risk management system. And that's really what these 3 things are really at the core of what I'm going to be talking about today. I'm going to talk a little bit about the trading platform. I'm going to show you some really neat stuff on the charting. For those of you who are using the charting already, I think you'll get something out of it. For those of you who are not using it, you might be, have your eyes opened up a little bit as to some of the things you can do with it. And I want to talk also about the risk management system and how it works and how you can use it to, to hopefully lengthen the life of your account. All right, so let's talk first about the risk system. How many of the people here who are live clients remember getting an email from us when you got your account set up saying something like, okay, here is your user ID, here's your password, here are your limits. Here is your E-mini S&P limit, here's your NASDAQ limit, here's your crude limit, here's your daily risk level. A lot of people don't ask us to make adjustments to these limits. They just want their limit set as high as possible, and that's it. And we think that is a mistake. We believe that one of the things you can do to help protect yourself is take advantage of the fact that we have such a flexible risk system. There's a bunch of people in here who are replying that they remember getting this and they remember making adjustments to the limits. That's great because a lot of people didn't take the time to do that. And if you haven't, this is really something that you should do right away. All right, talk to your representative in our office about it. Make sure you've got limits on your account that are reasonable. All right, so here are some examples of that. All right, the contract limits. The contract limits are unique position limits, net position limits per market. So what that basically means is that you have the ability to customize how many contracts you're enabled to trade of any one particular market. So as an example, let's say you've heard numbers get thrown around like $500 margin. Okay, anyone here heard that term? Duh, everybody here has probably heard that term, right? $500 margin. That means that if you've got $20,000 in your account, in theory, you could trade 40 contracts. 40 contracts with 20,000. That is very, very aggressive. But that's what $500 margin means. It means you could trade one contract per $500 you have in your account. Now, most of the people who've got $20,000 in their account, you could make the strong argument that you shouldn't be trading 40 contracts. But it also begs the question, should you even be enabled for 40 contracts unless you really want to be? If you didn't intend to trade a 40 lot, what are the situations that could arise where you end up in a 40 lot? It's really only one of two choices. Number one, you do it by accident. Number two, you flip out and you know you're supposed to be trading 1, 2, 3, 4 contracts. Something gets away from you, you start adding to it, you end up in a 40 lot, you blow out the account. If you don't intend to trade at that level, I highly recommend you contact your representative in our office and have them reduce your limits to reasonable numbers that fit within your hopefully written and on your desk game plan. If you don't have an idea of where your fixed limits are, you don't really have a plan. You're just kind of letting us set the limits and saying, okay, to heck with it, let's see what happens. This is a vital part of forming the right mental framework for trading in what is a volatile and lonely atmosphere. It's really important that you have reasonable limits on your account. We can be flexible from one market to the next. So as an example, sometimes people say, Patrick, I have $30,000 in my account. I'd like to be able to trade 10 E-minis, 4 crude oil, and 3 gold. No problem. We'll put those limits in. Give us a couple minutes to put them in place. Usually under normal circumstances, a couple minutes notice is all we need. We'll get them in place for you, and that's it. It's not like you have to fax in a form and say, okay, change the limit, and then hopefully it gets done in the next 48 hours. It doesn't work that way. This is a very malleable and dynamic risk system that allows us to make changes on the fly. It's a great, great aspect of the account. You should take advantage of it. The objective, again, is to prevent you from either getting into a position that you didn't mean to get into, which can happen in electronic trading. Everybody here has hit buy market on accident a few times instead of once. You end up in 3 times the position. Well, let us put some limits on the account so the likelihood of something like that happening is much lower. All right, or your game plan is I only trade a max of 3 contracts, but again, in markets like today where we see a lot of volatility, maybe something gets away from you and your discipline erodes at this the worst possible time. All right, if you have to call us to say, hey, Patrick, I need you to bump my limit up from 6 to 18, you might not make that call. The idea is that you might check yourself a minute there. That one instant could be the difference between you blowing the account out or not. Now, let's just to play devil's advocate, what if we did set you at the max limit and you were able to add to the trade and then the market went back to its mean and you got out and made a whole bunch of money? Sure, I mean, that could happen too. So, there's risks either way. But in general, we believe that if you have reasonable limits on your account, you're less likely to get yourself into a situation that is catastrophic. Okay, so does anybody have a question about the risk system in terms of contract limits? We're going to get to the daily risk level in a second, but am I being clear here about what we believe your responsibilities to be, what we think you should be doing? Not many firms will take this time to explain to their customers that they have this sort of flexibility, and most firms don't have this flexibility. So it's a critical part of the account. Okay. All right, fantastic. So that's one aspect of the risk system. The second aspect of the risk system is the daily risk assessment level. The daily risk level is a dollar amount where if you lose a certain amount of money inside of a day, we're going to try to blow you out of the trade. That's the short version. All right, now the ultimate purpose of this thing, this risk limit, is to protect the FCM from a customer going negative in the account to the point where we then have to collect the debit. That's a bad situation for everybody. We don't want our clients to go debit. Our clients don't want to go debit. Circumstances exist where it could happen no matter what we do. That's the reality of trading in a levered environment. It's not to be relied on as a stop loss. Your customer agreement says so, so take that for what it's worth. That's the real purpose of this thing. But it does operate at a secondary level for a lot of our customers, and that is the understanding that there is a little extra circuit breaker in there that, if operating normally, can help protect you from a situation that results in you losing all your money in the account. Most firms have some level where if you lose a certain amount of money, they have guys sitting there with mouse, with the mouse saying, okay, this guy, we're liquidating him, we're liquidating him, we're liquidating her. All right, our system is automatic. If you lose X amount of dollars inside of one day, then our system is going to try to liquidate your position. All right, now, where does that dollar amount usually start? What does it mean? How do you change it? These sorts of things. We usually, and I mean usually meaning not always, default this level to 60% of the starting balance of the account. You have $10,000 in your account. You're down in a horrible trade. You lose 60% of your balance. That's when our system is designed to kick on and liquidate. Now you're going to see your risk limit because it's shown in red letters on your login screen when you go into the platform. You guys all see that every day when you log in. So you know where this risk limit is. You always need to know where it is. You should never not know where it is. All right, if it gets adjusted, Transact sends you an email. You've probably seen that before. All right, but it's your responsibility ultimately to know where this risk limit is. But some people might say to me, look, Patrick, I got 10,000 in the account. My personal risk limit every day is only 500 bucks. So why don't you change my risk limit from 6,000 to 2,000? So why do I pick 2,000? Well, 2,000 is far enough away where there's a relatively little chance that the risk limit's going to trigger at a point where you're still trying to stay in the trade. Because if your personal limit's 500 and you're down $2,000, something's wrong, right? You're either not there, you don't know what's going on in the account, or whatever the case may be. It's far enough away where, in theory, should never ever be hit. But it's not an absolute catastrophe if it were to be hit. I mean, no one wants to lose 20% of the account in a day, but there's a difference between losing 20% and 60%, right? So the idea here is the daily risk limit's a dollar amount that, if it's hit, and it's really the way that it's calculated is your open trade value plus your cumulative P&L. That's when we're going to try to attempt to auto liquidate. If your risk limit is set to 60% and a $10,000 account, it would be 6,000. Right, and Tom, as you said, that'd be a bad day, and that's why, in theory, this should never ever be hit. Now, what should you not do? In our opinion, it's not a good idea to say, okay, Patrick, set my risk limit to $150. That kind of crosses the line into you're trying to use it as a stop loss. That's not the intended purpose of this thing. You should obviously be training yourself to manage your own risk. So you shouldn't keep limits that are that tight. You got to have some room to work. Okay, but the combination of the contract limit and the daily risk limit, in our opinion, is a demonstration of the fact that we go to another level of service to help keep our client base around and lengthen the life of the account with the hopes of you turning the corner one day. All right, you got to string together a lot of time in order to have a chance, right? Most people believe that. I believe that. You need to have money in the account. So if you lose it all because of one horrible day or a string of bad days, 2-3 days, it's really hard, mentally to recover, and financially you got to build things back up. It's no fun. So this is something that I really encourage people to think about. If you have not taken the time to evaluate your limits, you should do that right away. Talk to your rep about it. Tell them where you want your contract limits to be. Tell them where you want your daily risk limit to be. All right, and make sure that gets put in place. All right, so that is a good summary of the of the risk system. Jim says, can you comment on the 2% account loss per day? I mean, there's a common thing in day trading, like I only want to risk 1% or 2% of my account per day. That really is a function of the account balance, right? I mean, if you have a $1,000 account, you can't trade and only risk 2% of your account in a day. If you have $100,000 in your account, you only want to risk $2,000 a day. Okay, you could make that argument that that's, a doable thing. But, most of our customers, I don't think operate with, 1 or 2% in mind, because that would require them to use such a tight stop loss that the trades would never have a chance to breathe, So that would be, that's something to think about. But, in your example, Jim, like if you have a $20,000 account, what 2% is what, $400? I mean, that's in the area of what I think most people would want to be risking intraday. But another thing too is some people put 20,000 in the account, but they really have, like, in their mind, they have $100,000 to trade with. And we don't know that, because unless you share that with us, how do we know? So it's, that's more of a personal thing, but, there's something to be said about, not risking 10, 20% of the account, intraday. All right. Okay, let's talk briefly about the Infinity AT Dome, and then we'll move on to some other things. So the Dome is Windows-based. It's very fast, very light. It's functional. It's not loaded down with a bunch of junk, and it has almost no impact on the system's resources. That is a big, big thing for us. How many thinkorswim users do we have here? All right, pull up your task manager when you're running thinkorswim. Look at how much memory it's using and compare it to what you see right there. Trader.exe is the name of our executable. In the example that I put together here, it is using less memory than 1 tab of Google Chrome. For an average TOS user, our platform runs at about 1/100th to 1/200th, no exaggeration, of the resources of that program. I don't care how good your computer is, that matters in a fast market. This is why so many people trade with us and still have their charts with TOS, because they've been using their TOS charts for 10 years and they just want a better, lighter execution platform. If that is you, you would be joining a very, very large part of our business. So if you're a TOS user and you're having issues with it lagging or hanging up in fast market situations, that's the very, very common thing. There are some other programs that are similar, not necessarily as heavy as that one, but our program is super, super light, and most of you already know this. But if one of the reasons I wanted to mention this here is that if you are a customer of ours right now, make sure you check your task manager and make sure you don't have anything really cranking on your machine too hard that you don't intend to be running. All right. So this is one of the main reasons why you're probably here. This is a picture of the Dome. If you want to look at the recording later, you can see all this stuff. We're going to show the Dome here in a minute and talk about some things with it. So I'll just kind of skip past this. The charting, we'll just blow right through this. We're going to talk about some really neat things. Sierra Chart is an awesome charting program. It's free if you do a little bit of trading. If you don't do a trading, it's still really inexpensive. It's awesome. I love it, and I've loved it. I love it more now than I did a year ago. It's an unbelievable program, and if you don't use it, that's okay. But if you have an account with us, if you're not aware of this, which I hope you are, because otherwise that says a lot about our ability to market to you, is if you do 10-round turns every 30 days, then we waive the fee for the charts, which would only be $20 otherwise. Okay? Okay, day-to-day management of the account. For those of you who are, who have an account here, there's a couple things I really want you to start doing. All right, number one, read your statements every night, especially Friday night or sometime on Saturday. All right, I can't tell you the amount of times where I've come in on Monday and someone held a position over the weekend that they forgot about, and they could have gotten out of it on Sunday night at 5 Central when the market opens up, but they didn't because they didn't look at their statement from Friday. And then there's a huge market move, and of course it goes against them, and now we got to now there's a huge problem in the account. So make sure you look at your statement as soon as possible. Double check your open order window and your completed trade window. If I have time, I'll show that. If you hold your position through the close, understand your overnight margin requirements. Know what the overnight desk phone number is. Everybody here should have it. If you don't, email your rep right now and get it. And make sure you're using a good internet connection. Our program pushes a lot of data. We're not a very heavy software program from a memory standpoint, but we we are pushing a lot of data. We use a very fast and sort of aggressive UDP data feed by default. All right, this type of data, it's not the same as browsing the internet. That's why wireless networks and cellular networks and stuff are not as good for this type of a program. There is no professional tech person that will tell you that that I've ever known that would tell you that a program like this will work as well on a wireless network as it will on a hardwired Ethernet cable connection. Okay, so these are all very important things. Definitely, the thing about the statements, especially over the weekend, there's no excuse. All right, you make sure you read your statement over the weekend, especially Friday's statement, especially if you tend to hold positions, or if you might have been trading late Friday and forgot to check something. Okay, market opens up at 5 p.m. in most cases on Sunday night Central Time. You can call the overnight desk if you need some help. That's why they're there. Okay. Minimum download speed, Stu, usually I would say like 10 to 15 megabits per second is okay. It's not great. Anything under 20 I would say is not great. Anything over that you should be okay as long as you're not running too much other stuff. Okay. Windows 10 poly, I mean, I don't think anyone would really recommend Windows 10, but I would say, by now the majority of our clients have probably upgraded. We still are not running Windows 10 in our office, but a lot of our clients are running Windows 10 without issue. Okay. Robert, why do we disable the trading? When the account falls under 1,000, that's just a policy that is it's a risk policy put in place by the FCM. There is some flexibility if you need some time on the simulator if your account falls under 1,000, but that's just what the clearing firm's rule is. And again, we have to set the limit somewhere. Remember, one E-mini S&P is worth over $100,000. So you got to draw the line somewhere, and that's just where we choose to do it. But if you do need some time in the simulator, in most cases we can leave it active. And if you add some funds to the account, even just to practice, we can still leave the live mode locked. You don't have to trade live. So if you bring the account back up over 1,000, you can even have your rep leave your live account locked until you're ready, especially if you don't quite trust yourself. Okay. Okay. Cool. All right, so we'll talk a little bit about the Infinity AT Dome. I'll show a couple of tips and tricks, things that I've been doing with it for a long time. I'm not going to go through all this stuff right now. Most of you have a good handle on it already because you've seen it, you're using it, or you've seen it used by the educators that you might follow and so on. But it's a pretty light program. It does some really neat stuff with order management. If you have questions about it, give us a minute here to get to the next, to where I can bring the software up and we'll go through it. All right, so there's a chart book I put together last year called the Active Trader Bootcamp chart book. I edited a few things. If anybody wants it, as well as any of the stuff that we're going to show today, just email your rep for access to it. We'll email it to you and show you in the email how to download it into the right folder. I made a bunch of chart book files that I think are kind of cool. I'm going to talk about them. The Active Trader Bootcamp's one of them. There's like 10 other ones. So if anybody wants copies of what we're doing here today, just email your rep in our office and we'll email them over to you, at the very latest first thing tomorrow. Okay. Polly, no, there's no time stop available at this time. Okay. All right. So we're going to come back to this here later. I mean, obviously that we're just getting started. So let me get out of the PowerPoint here and let's go to the charts and everything. So I want to talk, before we get to the chart, I know everyone wants to see that, but I want to talk about a couple things on the Dome real quick, just that I think people can, do some things to simplify their life a little bit. The first is, you've heard this window, we call this the scoreboard, okay, scoreboard window. The properties button in the top right corner here will take you to a general properties window. A couple things that I like to do is I like to default my quick click option right here. Default quick click means that when you place an order, let's say I put an order here to buy one, at 23.76. It's one click, and a cancel is one click. So it's single click order placement, single click order cancellation. So left click to place the order, right click to cancel. Okay, one click. If I don't have quick click checked, I got to double click, double click, double click, double right click, double right click, double right click. I am of the belief that double clicking in general in trading platforms is not a good idea. So I really wish this were a default setting. It's not. So if you want it to be one, go to properties and then check default quick click here on the right hand side. Okay. Another thing that I usually leave off that I'm going to try to demonstrate here briefly, and then we need the market to move a little bit for this to work, so we'll see what happens. But I like to generally leave scaling brackets off, okay? Scaling brackets means that when you add to a position, the new position gets its own bracket instead of your brackets being averaged around your new average price. So let me just demonstrate what this might mean. So let's see if we can do, S&P is just about to open. So this actually might be a good one to do on right now. So the S&P is just about to open here if it hasn't already. So if I do a simple bracket, 8 tick target, 8 tick stop, and check auto and buy it here. All right, so I get filled at 80.75, okay? Now, the idea here is that when I add to the position, what does the bracket do? Do I get a new one lot bracket around my new fill? Or do my brackets readjust based on the new average price that's created by the addition of the new fill? So if I put another order here at 80.25, all right, we'll see if it gets in here. It really would like to get something at least 1 or 2 ticks away so that we can see the expected behavior. As you know, our simulator is pretty pessimistic when it comes to filling limit orders. We make it that way by design, but let's see if we trade down 1 tick here. And you know what I can also do is let's actually bring up the NASDAQ here. This gives me the opportunity to demonstrate something else anyway. So I'll just do a 10 tick target, 10 tick stop. Let's just sell one here. Okay, so all right. Well, I think we just we just missed this happening. What I'm doing here on the left-hand side is you notice we got filled, and the bracket readjusted around my new average price. Okay, so the bracket changed to a 2 lot. Instead of giving me a new 1 lot bracket at the new price, it gave me a 2 lot. Here, let's look at the NASDAQ here. The NASDAQ's breaking, right? So I'm going to sell another one. See what happens to the bracket? The bracket goes to a 2 lot, and it readjusts based on the new average price that's created by the fill. That is the behavior you're going to get if scaling brackets is off, if it's off. If you have scaling brackets on, you're going to get a new bracket for each individual fill, which is okay for some people, and it's actually the default setting. It works fine, but for people who like to aggregate the bracket around the new average price, scaling brackets should be off. If you do want to have a different bracket for each fill, then it would be on. So let's see if I can flatten this here, flatten both of these. And let me see, I may have to log off and back in for this to take effect, so I may not actually get the desired result here, but let's buy another one. All right, let's put another one here. We're going to sell the S&P here again. Okay, so the idea here is that if the market goes down to 1650, that I'm going to get a new 10 tick bracket around 1650, which means I end up with lots of orders on the screen. All right, that's intimidating and confusing in some cases. So again, just as a quick summary, and we'll kind of let this play out in the property section here, if you want to have each individual fill get its own bracket, leave scaling brackets on. All right, if you want to have the bracket be aggregated around the new fill, average price created by the fill rather, then leave scaling brackets off. Also, if you like to add position or brackets to positions that already exist, this function works best if scaling bracket is off. So if you're one of the people who likes to go into the market with no stop or target, and then later you want to add a bracket using the send bracket order button, scaling brackets really works best, that function works best with scaling brackets off. There are circumstances that exist where those brackets may not fire if scaling brackets is on. So if you frequently do that, you're going to want to uncheck this. Okay. All right. So that's really one of the most important things that I wanted to cover here. In general, there really are not that many things that I really think should be added to or adjusted in these settings. Okay. I really recommend that you leave the settings in general by default. There really shouldn't be too many changes. If you make some changes, that's okay, but they can be kind of hard to undo. There's not really a resetting function, so I really don't recommend you change too much in here. We kind of made it the way that we think it should be made. Okay. Cheryl, same concept with the trailing stop, right? So if you want to have, everything in in one trailing stop, then you would have scaling brackets unchecked. If you want each fill to have its own trailing stop, then you, which can get really confusing because things are moving all over the place, don't forget, especially in a fast market, then you should leave scaling brackets on if you want each one to have its own. And then yes, Tom, sending bracket around, if you send bracket order using this button, the bracket is going around the average price, not not the current price. Okay. Cheryl, which is better? There really is not one that's better. I prefer scaling brackets to be off. So when I add to a position on the simulator here, or as you see it here, I like to see the brackets readjust around the new average. But that's just me. That really depends on the person. All right, so that's just kind of like a little Easter egg type thing that I recommend people put in. All right, look at the NASDAQ here. So the NASDAQ came down, filled our second entry, and you see we got a separate stop and a separate target. So this is scaling brackets is on because the bracket didn't add to it, change to 2 contracts and readjust. It's giving us a new entry and a new bracket for each subsequent fill. Okay, that was the behavior we were expecting. Okay. Doug asked, do we recommend trading to a target or trailing stops? I mean, certainly having a profit target is not a bad idea. I mean, trailing stops, it's one of the more fragile ways of exiting the market because there's lots of variables. You have to make sure you have your stuff set correctly. It also is the type of order where let's talk about mechanics and reality rather than theory. When you do a trailing stop, folks, that is a cancel, replace, cancel, replace, cancel, replace to the exchange every single time the market moves. So if you have kind of a shaky internet connection or something is flaky, then if there's a communication blip somewhere, that can affect the ability of the stop to function properly. So when you have a stop that is looking like it's jumping up and down, it's not just moving from on your computer. It's actually us sending a modification, confirming the modification to the new price, sending you the confirmation that the modification has been accepted, then moving the one to the next level on your dome. Then it moves up again, and then the same communication happens over and over again. There's a lot of back and forth. So when you're using a trailing stop, as a result, again, difference between theory and reality. In theory, works great. In reality, if you have a bad connection or if you're 20 hops away from us in the internet backbone on the other side of the planet, you got to be careful. Okay, so again, in trading, there's a lot of differences between us, just like in market analysis, difference between theory and reality. We got to deal with the mechanics of the internet, everybody's firewall, the exchange, and all these things. And trailing stops tend to be a little bit more of a fragile, way of managing positions. On top of that, when you use trailing stop, most people who use trailing stops, use really tight trailing stops. So they're more likely to see stops get rejected, or they just take themselves out way too early and the market just keeps careening in the original direction without them because they got, stopped out at a 4-tick trailing stop. I would say that most people, tend to trail a little too tightly. So, there's a lesson there, but, it's a very personal thing. And some people really, really hate giving back, profit, and that affects them to the point where could really hurt them on the next trade. So, there could be value there for one person and not for someone else. Okay. David, I'm not sure I really understand that question. Are your position spots readjustable? Yeah, I mean, you can move the targets or stops if that's what you mean. So you can still modify the orders. Okay. So once the orders are in, these can still be modified, to new prices if you want them to be modified. So they're still acting as OCO orders. Okay. Font size, stuff like that. Alan, good question. If you go to properties, all right, properties here, there's a section here called set grid height and font. You can increase these numbers to higher numbers and the dome's going to get bigger and the text will get bigger. All right, that's not going to affect the text on the scoreboard. The scoreboard is really not dynamic at all at this point, but in the next release it will be. We are in the process, by the way, everybody, of a really, really nice, complete rewrite of this entire thing. It's going to be great. There's a lot of cool stuff coming down the pipeline, just so you're aware. All right. Okay, so I'm going to go ahead and let's just get out of this one and get out of this one. Okay. Good question, Buck, there about the dome. So you notice the NASDAQ dome is a lot bigger. I mean, you can't squish the whole dome. It's not proportional that way, but you can reduce the width of these columns. So you can, like an Excel file, if you put your cursor in the header of each of these between where one column meets the other one, you can really squish this down. The last column, frankly guys, I hide it. My domes usually look like this. The last column I take off the screen. To me, you know, we publish that data because the exchange publishes it, not because it's incredibly useful. So if you want to shrink down the, you know, the width of the dome so you can fit more on the screen, like if you have them all on a second screen or something like that, you can do that. You just have to do this one time, and then the next time you log in, the dome's placement should be remembered by the software, so you shouldn't have to do this over and over again. Okay? No, Buck, it will not be possible to do that. David, if you put two orders on the same price, the only way to separate them is from the open order window. The open order window is another window that opens up from the open book icon right up here. I actually have it on another screen right now. It looks like this. So if you have more than one order on one price, like let's say I buy one here and then I put another one here, the only way to separate them is to modify the price from this window here like that. So you can separate them, but it has to be done from this window, the open order window. You can't separate them on the dome. Okay? Harry, yeah, I think it will have a smaller version on the next rewrite. We had to do away with that because it caused some issues. All right. Okay, let's leave it at that for now. I'll try and come back to the dome here, but I do want to cover a bunch of stuff on the charting side as well. Okay. Yeah, Larry, you're right. You can remove the last column on the dome as well. I usually just hide it because I'm too lazy to go there, but you can go actually to the properties and you can actually remove the last column from this list by clicking remove right here. Okay. So if you want to actually have it off the screen, you can. I just usually squish it down like this. Okay. Hakan, you asked about like measuring delays. So this gentleman who asked the question is overseas. So the question is, how do I measure the delay between, you know, in milliseconds from me to you? There is if you email me in your case or your representative in our office, we can give you an IP address that you can ping and you can see how many milliseconds it takes to get to and from. It's not an exact measure, but it should give you a good idea of what the delay is, you know, for data to travel. So just send an email. We'll give you the IP address. You can ping it from your side and see, you know, how many hops, you know, you feel like you have to take. Okay. All right. Okay. So, you know, the beautiful part about the dome is that there's not much to it. Okay. I'm not going to go through an entire lesson on the dome. You guys have all seen the YouTube videos and so on. But these are little things that, you know, can just that a lot of people don't know, but just because they've never, you know, never been told or never taken the time to watch some of the tutorials. But the big thing is you can make the dome smaller by squishing the columns down like this. You can set the default quick click option. You do have a choice with how simple brackets function when it comes to are they aggregated or are they scaled. There is some flexibility. We just didn't want to weigh this thing down with so much gadgetry that it became unusable. That's the reason why it looks and feels, you know, so stripped down. And in the next release, there'll probably be a little bit more to it, but the general idea will be the same. That is, keep it light. Okay. All right. So I'm going to close the domes for now and move the scoreboard off the screen here. And I want to talk a little bit more about the charting. So how many people who are in the room right now actually use Sierra charts, whether it's with us or if you're not a customer or some other place or on it like your own separate subscription? Unless you do 10-round turns within a 30-day period, okay. Then we waive that $20. Okay, cool. All right, good. So there's a lot of Sierra users in here. That's good. You know, if you don't use it, you might be surprised that you might become a believer in this thing. I mean, again, I can't say it enough. It really has come a long way. Every 6 months or so, it goes through like a dramatic improvement, and I think that it's a phenomenal program. Lots of really good comments, and you know, I agree 100%. What I want to do is I'm going to show some of the things that I've made here, but then I'm not going to go through every single, you know, the construction of all this stuff. I'll try to give some examples, but these are the files I'm talking about. So if you look at the header up here, you see I've got these different what we call chart books. All right, I'm going to talk briefly about each of these, and then and some of them have important examples in them, and that's why I want you to see them and have them for your own, you know, to work backwards off of as well. but I'm going to talk about them a little bit about each one. I'm not going to answer a ton of questions about each one just yet because we'll get carried off in a tangent, but I'm going to explain some concepts and then we'll take more questions near the end, okay? All right, so the Active Trader Bootcamp chart book. This chart book was designed to illustrate the fact that you can have a lot of data on one screen in Sierra. So what I did was I created a quote board. The quote board is linked to these charts. So when I click on the symbol here, the charts flip over to that symbol. One thing I'd ask you to notice is that it's a really quick flip from one market to the other. That's because the data is stored, the historical data is downloaded one time, it's stored locally on your machine. So when you when you click on a new symbol, that data is accessed from your computer, not from our server. So all we're doing is filling in the blanks for the last few seconds. All right, but the majority of the data is coming from your side. One other thing that I've sort of realized about maybe Thinkorswim and some other places too is that a lot of these other places do all the calculations on their side, on the server side, and then they send you the result, which is being projected onto your program. Here, this stuff is being calculated on your side. So that's why these transmission times, I feel like, are so much faster. All right, and that's why when people often run our DOM along like the Thinkorswim chart, they might say, wow, your DOM is like two or 3 seconds ahead of my chart. I didn't even realize what I was missing. So I think it has a lot to do with just the mechanics of the way we do it. But in this case here, you click on the symbol, the charts flip over. So here's a summary of what we're looking at. Now, this chart here on the left is a daily chart, nothing crazy. It's just a 50 and 200 period SMA. The objective here was to just demonstrate that you indeed can kind of get a big picture look at things. For those of you who are curious, you can maximize the charts like this. You can restore them back down to their original location. You can have the charts can be tiled on the screen. It's very flexible. Over here in the bottom left, I have a 15-minute chart of crude. There's a reason why that's there. I'll explain in a second. And then I have a tick chart here, NYSE tick, which some of you may recognize, which is basically a market statistic related to how many stocks on the New York Stock Exchange have traded up versus down in the last tick. And a lot of people use this for for indicators, and they look for it to reach these extreme levels. Like as an example today around the FOMC. So that's available here as well. All right, all the market internals are free. So if you have an account here, the market internals are basically included in the charting. So the internals include things like tick, trin, the vol spread, stuff like that. Okay, and it's all under find symbol, and if you look under what's called market stats, which is kind of at the bottom, market stats, you can see there's about 100 of them in here. Okay, so that's under file, find symbol, and then you're looking for market stats. And so the symbol for the tick is tick-NYSE, and then there's a whole bunch of others. All right. Okay, now let's look at the main chart here. So the main chart is what's happening is here. This is a 15-minute chart, and on the 15-minute chart, we've got some levels, and we've got some volume profiles I want to explain. And so the main premise of this chart is twofold, or threefold. Number one, you can have important levels that are of a larger time frame easily displayed. Previous high, the low, the weekly low, the weekly high. Okay, that's pretty cut and dry. Then what you've got is a volume profile that represents a new profile for each day with the bars aligned to the right. So this is the volume profile for today, this is the volume profile for yesterday and the day before and so on. Okay, and then you see on the right-hand side there's a colored profile here, and that is a weekly profile. So the weekly profile is bigger than the daily profile because it's encompassing everything, including Monday. So you could argue that it's not necessary in this case to really have a weekly high and low on this chart because you can easily see that by looking at the edges of the profile. And in fact, I can actually hide that study just by clicking this hide button here. We'll take the weekly off. Okay, that was actually the same as the high and low. The high of today was the same as the weekly high because today it did make a new high. Obviously, we saw that. So this was hidden a moment ago, but this is how it might just be displayed otherwise. So the reason I like to have the weekly profile on there is that, and I really don't look at it until Wednesday or Thursday, but like on Thursday, if we're making a new high or low of the week, that's kind of important. You could argue that that's kind of important. A lot of times you'll see a flurry of activity, around that area. So, for those of you who are into volume profile or the idea that, the reversion to the mean profile style trader where, you want to you're looking for a nice clean bell curve profile, You know, you can do it on a daily or weekly or higher basis, and you can have them displayed on the same screen. All right. Tom says, wow, this chart alone can save me time every day. Well, get ready, Tom, because we're going to show you a lot more, okay? So I'm glad you said that. Appreciate that. James, how do you move the symbol up and down on the quote board? You actually can go to the settings window right up here, James, and go to set symbols, and it brings up this window. And you can use these interface here, move up or move down, to put them in the order that you want. Okay? Gene, you can trade off the charts. I'm not going to, or Jeff, I'm sorry. You can trade off the charts. I have a really good, like 20-minute long tutorial on YouTube that shows you exactly how to set it up. If I were to tackle it here, it would set us way back. So I'm not going to go too far into it, but it is possible to trade off the chart. You can place orders on the dome and manage them from the chart. They talk to each other. So the short answer is yes, Jeff. Okay. Okay, the quote board, David, you just go to File and go to New Quote Board. And that brings up a window that looks like this, and then you can double click in here to start putting your symbols in. Okay? So I don't want to get too far in that. We got good videos about basic stuff like that. So I'm gonna move on. I'm not trying to be rude. Okay. The weekly profile, Dan, is really just another volume by price study. So the volume profile study is called volume by price, which is right here. And what happens is you add it, and the way that the volume is created is by choosing visible bars or multiple profiles based on fixed time is usually what I'm using. So if you go to add the profile chart and you go to multiple profiles based on fixed time, then what it's doing is it's looking at these two variables. So when you add volume by price, you're going to choose, instead of visible bars, which means the profile is based on how many bars are visible on the chart. That's like a dynamic profile. Instead, you're choosing multiple profiles based on fixed time. And then when you make that change, it is now looking at these two variables. So what I did is I added one that's for a daily. And then on my other one, it's set to weeks, 1 week instead of 1 day. So I simply have two instances of the same study with slightly different properties. All right, and again, if you want anyone who wants a copy of the file, just email your rep in our office. We'll send them all to you, okay? So you can work backwards off them. I also have a couple of really good videos on YouTube about how to build the volume profile from scratch. All right. The last thing I want to touch on here, and this actually became really relevant this week. How many people watch crude get smoked on the 14th? Okay. This dotted line is crude oil. So I made this chart originally last year when crude was breaking down big time, and every time, you know, the S&P looked like it was going to go up, then crude would make a new low and it would take the stock market right with it. Remember, it was around 30 bucks. Well, I was like, okay, if I'm an S&P trader, it would be foolish at best to not at least know where crude is when crude is making like all-time lows from recent history. So what I did was I added a study here called overlay single line. And I'm effectively overlaying this crude chart onto my 15-minute S&P chart. It didn't really matter as much today. We did see crude rally, so there is some correlation here, but the real correlation was in here. When crude was breaking, the stock market was getting scared. And so if you have the idea here, there's one possible, or one, in my opinion, place where this saves you, and that is crude is at a really touchy level. You have a great setup on your S&P, and you take it, crude makes a new low, and you get blown out because of crude oil when your setup was great. You know, the idea here is to keep an eye on correlated markets when they're reaching extreme periods. It doesn't mean you always have to have crude visible here. You can always, again, as I demonstrated, go to the studies window and hide the overlay. Okay, it'll go away. You know, it's one of those things where if you have a great setup and you want to be long the E-mini S&P, you may want to reconsider if crude's making a new low and people are nervous about it. So that's really all that is. There's a couple of really good extreme examples of this same process where we have an overlay that I'll show you. Actually, if you go to File, Open Chart Book, it's called 2017 Update Overlay, and I actually haven't updated this since the beginning of the year, so I don't know if it'll come up the way I intended. But what I did was I added a bunch of charts, and I added a bunch of overlays that are all overlaying their price. So all these little charts here on the right are overlaying their price onto this 15-minute chart. So this looks like a bunch of gobbledygook, and it's not something you want to sit there and look at all day, but it's a way for you to see if one or two markets are making an outlying move relative to the other. So this is an extreme example of the example that we just did a second ago, where we just got crude oil here. Okay, yeah, you can do crude, bonds, the Canadian dollar, you know, the yen, the Australian dollar, that kind of thing. It's pretty neat. Stock market and the S and bonds on the same chart. It is interesting to watch those correlations come and go. All right, Sam. Yeah, you can change the how many. What Sam is asking is about the ticks. Like how many ticks does each volume bar represent? That defaults to 2. So what that means is that every row represents 2 prices. So if I change this to 1, that's not a problem. But what happens is sometimes the bars get really hard to see if there's a wide range on the chart. So I usually leave this at 2. In some cases, if I'm looking at a really big time frame, I go even higher, sometimes 4 or 5, because it's, you know, this is, to me, it's a much more general and big picture way of looking at things. I'm not trying to, you know, nag one price or the other. And Naran, yeah, it is kind of a comparison chart. Doug, the IN32 there, that is, I think it just means input. I'm not even sure why they displayed that. That started showing up a while ago. I don't even know why that's being displayed, to be honest. Okay. Yeah, Kresimir, we are recording it, and there'll be a lot more, so make sure you get the recording. All right. Okay, so let's move on to the next one. So this one is a different color. I know it's probably, you know, everyone is like, okay, what was he thinking when he made this? Well, I made this in response to a customer who wanted me to replicate a chart setup that he had on something, another program that was way more expensive. And it was, you know, had a blue background. And so what about the color? I was just trying to make things look, you know, familiar to him. But what this is basically doing is this is a profile chart, an actual TPO, or otherwise known as market profile chart, where we've got the market profile being built on a different profile for the day and the evening session. So if we look here, okay, on the right, this is today's profile in the NASDAQ. Okay, it's really wide because the market was obviously up big, so it's kind of hard to see all the letters on my narrow screen. If you have a taller monitor, you know, it works out a little bit better. But basically on this profile, you're going to see a TPO profile, which is where every letter represents a 30-minute block, and that value can be changed as well. And you also see a volume profile. And then what we're doing is we're very clearly showing the value area in terms of time, and then the value area in terms of volume, which are often similar but not always. And then you get a point of control, which is this pink dotted line based on time, and then you get a volume point of control, which is this blue bar here. So the reason I'm showing this is that I wanted it to be clear that you can do full TPO profile charts with your charting software that you have here, folks. All right, you don't be tempted to go pay $300 a month for a profile chart. It's silly. Maybe 10 years ago. It's just not necessary. All right, so there's a lot you can do with this thing. It's one of the most highly improved parts of Sierra recently. All right, there's no need to go pay $200-300 a month for profile software. All right, so you know, evening session, day session. This can be. You don't have to have 2 sessions. You could have one giant session if you want. It's super cool. All right, so if you want this as a sample, this one took me a while to make, so I'm not going to go through the ins and outs of it here. But it's a great one to work backwards off of. I also have a separate YouTube playlist on our channel dedicated entirely to profile charts, like how to build a composite, how to do 1 session, how to do 2 sessions. So if you care about this stuff, let me know, and I'll post a link to the YouTube stuff here in a bit. Okay. Okay, cool. RJ, is there a way to display what D period represents or F period, for example? Well, no, I don't think so. You're basically operating under the assumption that, you know, every letter represents like a 30-minute block. So, and you can set the letters. You can choose what the letters are if you want to. These are set to defaults. I'm not sure you can post any more information about each, like what time each subperiod, you know, really was. Good question, though. Yeah, I'll definitely post the YouTube links here as soon as we get through. Okay. Okay, next one. Yeah, you can split the periods. That's right. Okay, so the next one, this is an example of something that is kind of innovative and cool that Sierra has done. all right? And every now and then I do a video for this little YouTube playlist we have called Futures on the Fly. There's probably 20 or 30 of them up there over the past couple of years. It's not something I do all that often, but every now and then Sierra comes out with this like cool, innovative thing that is not, it's a reminder to me that you don't need to go buy every indicator on the street to, to achieve some of the goals that you might have. Now, let me preface that by saying that we have, in my opinion, some of the best educational partners in our business. And we really want to work with groups that actively engage the customers rather than just sell the indicator. And we think we do a really good job of that. So there are certainly situations where paying some tuition and getting your tools set up properly so you can follow your guy is necessary. All right, but it doesn't mean you have to buy everyone from every educator. Okay, and in here, what I wanted to do is highlight something that is called the divergence detector. So it's kind of a dorky name, but divergence is often something that is hard to define numerically. It's usually a visual thing. And basically what the divergence detector does is it looks for divergence between the main price graph and whatever you have in the subgraph. Like in this case, I have this awesome oscillator, the Bill Williams tool. Okay, so what it's basically doing is it's looking for, okay, let's go really mathematical, even beyond me. What it does is it draws in the background, it draws a regression line for the main price graph and for the oscillator. And then it measures the angle of the regression line for the main price graph and the oscillator. And then it measures the divergence between the angle of the regression of the main price graph and the regression of the oscillator. And if that angle exceeds a certain number, you get a notification. So that's what divergence is. And that's how this chart treats it. So what I did was I showed a divergence indicator on the left. We did a video on this the other day. It's a good example of just something I documented on the YouTube channel. And what I did here is I added the same detector, divergence detector, on the same chart, except I made the guts of the indicator displayed. So normally when you add the study, it looks like this on the left. What I did here was I added a few more instances of it, and I put some of the guts of the indicator underneath here. And so what you can see, if we get a kind of a zoom in here, is that there's an angle measured of the study, and then there's an angle measured of the main price graph, and then there's a difference. And that difference is here. And if you go to the study section, you can pick in the divergence detector section what threshold in degrees you're looking for a difference. In this case, I have 45. So because this is only 6.5 and not 45, there's no arrow. All right, if I put this to 4, for example, we would see an arrow because that value is less than 6.54. All right, so there's a lot of debate about the usefulness of something like this. I think that if you couldn't find an oscillator that would that would look neat with this, what you probably could find is you could use even a main price. You could overlay another market underneath here. Like if you had S&P, you could put bonds down here, and you could use that as as something to compare a divergence. So it's an interesting concept. This is a newer edition. It was just updated in one of the more recent versions of the charting program. So there might be some things coming down the pipeline for it as well. Just an example of when Sierra does a good job of responding to the community. When they're looking for something. So it's pretty cool. All right. Okay, let me get to a couple other things, guys, and then I'll come back to some of the more general questions. The short answer is, you can detach charts. You can open new separate instances of Sierra. There's a new instance function under here that will launch an entirely new instance of the charting program that you can be moved to another monitor. All right, that's going to put a little bit more strain on your setup because you're now running 2 instances of Sierra, but you certainly can do that. So you can either detach individual windows using this detach option like this and move it somewhere else. Okay, if you want to see 2 separate chart books at the same time, like this tab and this tab at the same time, you can actually go File, New Instance, and it'll open up an entirely separate instance of the charting that can be moved onto another screen. So you're really running 2 versions at the same time. So it is possible. All right. One thing that is really useful that I don't think anybody knows can be done is you can link charts by study. So what this means is that what I have here are 5, 15, 60, and 750 tick chart, okay, of the S&P. And what you can do is you can set a link number and a link type so that if I change the study on one chart, that it will actually change the studies on the other chart as well. So this is called linking, chart linking, but instead of linking by symbol or by time frame, we're linking by study. So watch this. Let's go to the 5-minute, go to studies. The moving average is an exponential moving average. The default, it's an 8-period EMA. So let's just make this 100. All right, now keep in mind we're on the 5-minute here. Watch the position of the study on the far right chart. Remember the value is around 2380, okay? And if I apply this, remember I'm on my 5-minute, okay? Notice that all the charts change to the 100-period EMA. So if you make an adjustment to any study on any of these charts, because they're all linked by study, they all change. So it's kind of a neat function. It's a little bit cumbersome to set up properly. I'll demonstrate it here real quick, but the general idea here is that you go to the chart menu and you choose first the link number. So in this case, I chose link number 1. I also have a shortcut for link number 1 up here at the top. So all I had to do is click on the chart, click CL1, click on the chart, click CL1, click on the chart, click CL1. That gives me this L1 in the header right here. Link number 1, link number 1, link number 1, right, link number 1. So that's how you can see that the chart is linked by a number. Okay, then I went to chart, linking, type, and I chose link chart studies / graphs. And I did this for each one. So for each chart, I click on the chart, go to chart menu, linking, type, studies / graphs. And I repeat that process for each one of these charts. And then once that's in place and you see that check mark in there, then if you change the study on one chart, it's going to change on all the others. So for those of you who are sitting in front of this nightmare where you made all your indicators look perfect on all 28 of your time frames, and you realize you messed one of them up and now you have to go redo them all, this is a way where you can never have to do that again. All right, so you link them all. The way that I would generally recommend you set up a window where you've got all these things together is to make one chart that looks beautiful and gorgeous and has all these properties in place, and then just right-click and duplicate it over and over again, and then change the time frame or the symbol or whatever it is you're looking to do. So you can go to you can make one chart, put your indicators on it, go to chart, linking number 1, and then type link chart studies / graphs. Then when you duplicate that chart, that property goes with the copy. So you're not doing that over and over again. Again, make one chart that looks perfect and then copy it a bunch of times. All right, that's kind of a neat thing that I think people have asked us about before. Larry, no, there's no way to use a second data feed from a different vendor in our second instance of the charts. Not possible. Tom says 2 instances of Sierra is probably only like half of 1 instance of TOS. That's probably true. I agree. Yeah, anyone who wants to link to the recording can have it. You don't have to be a customer to have the recording, although we hope you consider us. Doug says, when would you use the study linking as compared to a study overlay? Well, the overlay is usually used when you want to take a study from one time frame or one market and put it on a bigger time frame or a different market. So an example of that would be, Doug, like if I have a 60-minute chart up with a 34-period EMA, and I want to overlay that 60-minute, 34-period EMA onto a 5-minute chart so that I don't have to have both of them up all the time, that would be a good example of using the overlay. The linking is more like if you're looking at, let's say you're looking at 10 different markets and you want to change the moving average from 5 to 15 on one, and you want it to go on, you want that change to take effect on all the charts on all the markets. That's when this linking option might be better. Okay? Yeah, sure thing, Cheryl. Appreciate that. Okay, good, Doug. Mort, yeah, I believe you can set a default chart book for the new instance. So if you get the new instance up and you go to global settings, general settings, just like you normally would, global settings, general settings, you should be able to specify a file to open on startup there. Sure. Dan, if you just want to clear this recent file list, you can choose clear recent file list here. Or if you actually want to delete a chart book, just go to File, Open Chart Book, click on the one you want to delete, and then click Delete File. Cecile says, if a subgraph is not in the study for modifying the display, but is only seen with the chart settings values tool, how can I display that? That's a good question. Display reversal price. So you don't want to have the you just don't want to, why not just have the price label on the zigzag? I don't understand why you wouldn't want to do that. So if you want to see the reversal prices, there's a label option for that. You know that, right? Or don't you? You can label the zigzag reversals with prices. There's an option in the study settings for that. So let me know if we're on the same page. Al, how do you make the all charts change symbol? So if you want to instead link these by symbol, Al, there's two ways to do that. You can either use the way we do with the quote board, where I click on the quote board and all the charts are linked to the quote board. Okay, so all the charts that I have linked are flipping over to the new market. If you want to do it that way, you can do it that way. If you don't want to do it that way, where you want to actually change the symbol on one chart yourself, like with your keyboard, then you can go to chart, linking, choose the link number that you normally would, like 1, and then instead of type, choose link symbol. Or excuse me, instead of link chart studies, choose link symbol. Okay, if you do that and you change the symbol on one chart, any other chart that is also sharing the same link number will change to the new symbol. So this is only one option in here. There's lots of other things that you can link by. Cecile, I'm intrigued by your question. I don't think I have enough time to answer it here, so I would like you to email your question to me, because maybe I can help with that one. What I'd like you to do is email the question to whoever you normally deal with in our office and tell them that I told you to do that. Okay? Okay, how does this handle rollover? Fred, the rollover, there's a number of different ways to do rollover. Let me get to a couple other things, and then we'll talk about continuous charts, because you have a lot of different ways you can handle the rollover. Okay, get that in a minute. James, what is a guaranteed lock? I need the lock. I need it too, James. For that symbol, trust me, I wouldn't be talking about it. I also wouldn't have been here at 4:30 this morning. Simple as that. All right, so a couple other things I wanted to touch on too. We've had an increased inquiry or level of inquiry lately about spread charts. I'm not going to go into the details of these because I'm about to make a ton of videos on this process, but you can do, some people refer to them as fly spreads. So this is an interest rate spread that we're looking at here, 10-year note interest rate spread. This here is another really common spread. 3 times the 10-year note minus 1 times the 30-year bond yields this value. Okay, there's a couple of people that we've worked with or are about to work with who teach this type of analysis, like interest rate spreads. This is something you can definitely do in our charting program. Okay, we use a study called difference. The difference study allows you to subtract one chart from another chart, but it also has the ability to add a multiplier. So in this case here, all I'm doing is subtracting the value of the bond from the note, except I'm multiplying the note value by 3, and then that yields this fractional value here. All right, so if you're interested in like crude spreads or grain spreads or whatever, you can definitely do that here. Okay, there's no need to go somewhere else for that. All right, and again, if you want to copy these files, make sure you let us know. This one here is a little bit different because it's actually a 3 spread chart. So there's actually 3 values in here with different multipliers. So if you're interested in, a lot of people who are doing this are really, they're doing 2-year, 5-year, 10-year note, 30-year bond, ultra bond, totally doable. All right. Polly, yeah, you can set the start time on the continuous chart function has no bearing on the start or end time. So if you want to do a continuous chart and have the start time be 5 p.m., you can. In fact, almost every time I open a chart, my start time is always 5 p.m. So when I open a chart here, start time 1700, end time 1600, that means that the chart begins at 5 p.m. or 1700 hours, which basically means that any indicator that references the open, like daily open, high, low, close, or anything that cares about the open, is being based on this time, not midnight or 8:30 or anything like that. All right. Fred, you can't place the order as a spread. You still have to leg into the spread, but you can display the price as a spread price. Cecile, yes, if you want 2 different color schemes for any drawing tool, not just Fibonacci's, you can do that. In fact, I'm going to cover that in another chart here in just a second, like in any second now. Another thing I'm going to show very, very, very briefly, because we just did a video on it, is Sierra introduced this new indicator called a large volume trade indicator, which is basically a measure of relative volume. I set the default here. It's a 1-minute chart. I set the default to 200 contracts. So I'm only seeing these boxes when a 200 lot occurs. And the size of the box is based on other trades on the same chart. So as you can see here, there were probably some really big orders that came in right around this time. This was at 2:30, so that's a little bit after FOMC. But this is kind of a neat thing for those of you who are into the whole order flow thing, and you want to be, time and sales, or you want to be notified when there's a big order that comes through. This is a way to do it relative to other bars in the same chart. It's pretty neat. I mean, you got to be pretty nimble to react to data like this. A lot of times when people are looking at order flow, they're really getting, they try to be computers. That you can't try to be the computer. But if you're looking for an indication of a lot of interest, this is something you can explore. And we did a video. It's in the futures in the fly section if you want to go back and look at it. I just wanted to show this. And yeah, you could do it with, Renko chart or any other charts. All right. Okay. Hey, Dan. Yeah. See, what Dan asks is, can you guys help me build a study or a chart similar to something else that I'm getting on XYZ, tradingeducation.com? The answer in most cases is yes. Okay. So we're pretty good at that. The truth of indicators in general is that most custom indicators are permutations of stuff that already exists in the public domain. Some of it's very, very modified, and some of it's not. A lot of times we can probably help you draw up something similar. We're not going to, try to, mimic exactly one of our, one of our, partners or something like that, because, that's not in our interest or our partner's interest. But if if you're looking for something that, works on NinjaTrader or Thinkorswim or something like that, and you want some help rebuilding it because you'd like to do it here, we can probably help you with that. And if we really need to get a programmer involved, we can connect you to someone who does custom programming at a very reasonable cost. Okay, so we're actually pretty darn good at that. And it's kind of a fun challenge. I always talk to people who are coming over from TradeStation, and they're like, oh my God, I've been using TradeStation for 7 years. I've bought $10,000 worth of indicators. And there's often an opportunity to do a hard reset and say, okay, let's start fresh. But there are some things that they want to bring with. Most TradeStation users are really surprised at how we can mimic the look and feel of what they had before. It's very disarming. It makes the whole process of switching to us way less painful and daunting. So, even down to the background colors and every little thing. I mean, we're pretty good at that. So if you have something you want us to give a crack at, try us. It'll be worth a shot. All right. Okay, so let's go on to the next thing. Cecile, this is touching on what you described. So I call this one the multi-time frame zone consolidation. I remember writing that and being like, wow, that sounds ridiculous. But here's the idea. I got a 2-minute chart. Okay, on the 2-minute chart, you see some funny colors, different colors. All right, what's happening here is I used a drawing tool that we call the extending rectangle. I put it in my toolbar up here. It may not be in yours. If you want it to be in yours, you can put it in your toolbar. But if you don't have it up there yet, it's under Tools, Extending Rectangle, which is right here. And what the extending rectangle does is it draws a, here, let me turn that window off. Hang on a sec. What the extending rectangle does is it draws a rectangle on an indefinite basis into the future. And what I did was I assigned myself a different color scheme to each instance. Right? We call them tool configurations. You can have up to 8 or so of each one. So what I did was whenever I draw on my daily, I would use tool configuration 1, I believe. So I would just go to the extending rectangle, go to TC1, and then I draw the line, and there it is. Okay, then I erase it. Let's say I go down to my 60-minute. I always in my mind assign that one to TC2. So I go to TC2, draw my area. There it is. It's a different color. See that? Erase it. And if I'm on my 2-minute, which is my shorter term one, extending rectangle, TC3, different color. Okay, so what I did, the first thing I did was I attached in my mind TC1, 2, 3, etc. to a different time frame. So anytime I'm doing a daily, I did TC1. Anytime I'm doing, a longer term intraday chart, I did TC2. And then anytime I'm doing a shorter term intraday chart, I did TC3. And let me show you how you can customize these. So if you go to Tools, Tool Configs. All right, for those of you who like to draw on the chart a lot, it's worth it to go through this one time and just make it the way you want it. You don't have to do every one of these drawing tools. I don't think I've ever drawn a Gantt fan, okay? But I do use the extending rectangle a lot. I do use horizontal line a lot. I do use the ray a lot, which is like a line off into the future, not like a trend line that stops. So the extending rectangle, I clicked on it. TC1 is a certain behavior color-wise. It's got price labels. It's got the labels on the right side instead of the left side. There's lots of things you can change. All right, how transparent is it? Then I went to TC2, and I made it look a certain way. Then I went to TC3, and made it look a certain way. So for Cecile, with your question with the fibs, you go to Tools, Price Retracement, and you do the same thing with your, Tool Configs, Price Retracement, which is right here. And you just do the same thing with TC1, 2, 3, for blah, 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 blah. All right, now, that's only half the battle. You got to set that up. Herman, thanks, man. Appreciate that. See you later. Okay, so what you do then is you set those up properly. And then on the chart that is like your home base, where you want everything to be painted onto, you're going to right-click on the chart, go to Chart Settings, and you're looking for this section under Advanced Settings 2 that says Copy Chart Drawings from Chart Numbers. And then I have 1, 2. Yes, Mort, we are recording this. So I have 1, 2 in here. So that means that anything from chart number 1, see chart number 1 up here, or chart number 2 is being copied onto chart number 3. Any drawing tool, you can't pick and choose which one. So you can't say only the extending rectangle, but not the trend line. All right, anything you draw on chart 1 or 2 is going to be displayed. It's kind of cool. So if I go to the daily and I do draw this ray like this, that line is automatically being painted onto my 2-minute. So the cool thing about this, which kind of goes in line with a lot of the webinars that I've given, is that this is a way for someone to pare down the amount of information that they are looking at on a daily basis. That is the goal. So if I have this chart up, I don't even need my daily and 60-minute charts up necessarily. There might be situations where you want them, but in this example, I don't need to look at that data. It's just chewing away at my brain power from the moment I start looking at it. All right, that's decision fatigue, okay? Everybody here has got to believe in that by now. Look at as little as possible. And so what happens is, as the market were to rally, it would start to hit a zone that I can tell you is something I cared about on my 60-minute time frame, because I know that the light blue means 60 minutes. And if we really were going, rocking and rolling, we would end up seeing the green areas down here. So if the market were to start to break, I mean, this is 100 points away, but, let's say that it was a little closer, you can see the market start to go into an area that you cared about on a daily time frame, which could be a very important level. So when you combine something like this with the idea that you can put indicators based on daily or 60-minute charts onto an intraday chart, you really start to understand that it's possible to get a lot of information in a consolidated space without looking at 20 charts all day long. That to me is one of the very powerful parts about Sierra Chart, is that someone who's not a programmer like me can do something like what we're showing here today. All right. Now, if you want Elliott, if you wanted to do like support or resistance, you would have to pick different colors. So it's not smart enough to say, okay, this is supposed to be support, we're going to make it red or green or whatever. You'd have to do more tool configurations, but you're on the right track. All right, now let's go to the next one. So with this in mind, I wanted to show you something that I made recently that I thought was pretty interesting, and I think this is again, this example is a combination of, in my opinion, the power of the charting program, and also, the reason why you guys might be Infinity customers or one of the reasons why, and that is we're trying to put together innovative ideas for you. And this is one that I think is pretty cool. So, this doesn't stand on its own legs. Don't use it as your own system. Be careful. It's your own risk and so forth. But what I've been working on is trying to demonstrate, areas where I'm always kind of come up with a way to make this work, just like you guys. So one thing I did was I created this little alert system that is based on an extended CCI, which really could be any oscillator. I just picked that one. We did a webinar the other day with a gentleman who does a lot with CCI, and that's kind of what was fresh in my mind. So I was looking for extended level on the CCI in combination with the market breaking above its volume value area high or below its volume value area low. So what you see on the chart are the volume value area high. This is not based on time, but rather on contracts traded, and the volume value area low, which means that 70% of the trading occurred in these two prices, which is a big range in this case. And then the point of control, which is the price at which the majority of the volume traded. All right, so that's what these levels represent. So the idea was that if the market breaks below the volume value area low, and the CCI is at a level that it very often does not maintain for very long, in which case, in this example, negative 200, I was looking for a reversal. So the market is breaking down into an area that the market hasn't traded that much in this session, and the CCI is reaching an extreme low. That was an example of like, okay, well, what if I want to be notified when that happens? And if we scroll back in time a little bit, you'll see other instances of this, possibly putting together a decent idea. So here's the opposite, okay? So here's the market going, okay, above its value area high, and the CCI reaching an extreme level, and there's the notification occurring. So when you look at things on a bigger picture like this, you can't use a 2-tick stop in the S&P. Okay, it's not going to work. Nothing will. You've got to be able to take a little bit of pain, I think. And if you're going to do something like this, you really got to let it breathe in order to have a chance. So don't try to do this tomorrow with a 3-tick stop and then blame me later. Okay, it's just an idea. But if you scroll back, you'll see multiple instances of the market reaching these extreme areas, and the possibility of a decent trade coming in. This one was not so good. This one, I still wouldn't. This is something where I would recommend having a stop wider than this, but there wasn't a huge breakdown. It was a few points. But there are some examples of it providing a decent signal over the past, however many days I've been looking at this. So the point of this is to show you that there is some validity to looking at combinations of an oscillator and a bigger picture profile style way of looking at the market. It doesn't have to always be one or the other, but also to demonstrate that you can do some really neat things with the notification process. So on the right hand side of the screen, this is the same chart with all these studies hidden except the notification. The notification is two things at the same time. The first is a red background color and then the red arrow. These are two separate ways of displaying the same thing. The only reason I put them on there is because I wanted people to see that they could do it either way. You don't have to have them both on there. Some people just like the red background. Some people like the the arrow. And certainly, Jeff, you could do it with NYSE tick. So if you put the tick on another chart, you overlay that into region 2, and then utilize that as your basis, you certainly could do that as well. So, I want to show you, and this does get a tad bit advanced, but I do want to show you a little bit about how the mechanics of this are done. Okay, so what we're going to do is, and then we're going to move on to a couple other things, but we're not going to go too much longer because I know everybody's been here for 90 minutes already. But if we go to studies here, CCI is study 1, volume value area lines is study 2, and then I have a color background and a color bar. I want you to ignore like the color bar for now because these are the same thing except it's the same, it's the same end game. It's just different study. You can do an audible alert as well, Glenn. Yes. All right. So let's look at the first one. So when you look at color background based on alert condition, that's what's generating the red background color. All right. So we add that study, and then we go into the alert tab, and you see there's some language here. So this is about complicated as it gets with the coding, and you do have to learn a little bit about how to refer from one study to the other study. But this is basically what this means. All right, ID1.SG1 means, in this case, ID1 is the CCI, okay, and the greater than ID1.SG3. So ID1 is the CCI, SG1 is the CCI itself, and SG3 is this upper line. So in plain English, this means when the CCI is greater than the upper line of the CCI indicator. That's our first condition. So whatever the line is, in this case I have it set to 200, whenever the CCI is greater than 200, that's 1/2 of our condition. Separated by a comma, and then there's another condition here, cross from below, and then you see in parentheses C, comma, ID2.SG2. C represents the current price, the last trade, and ID2.SG2 represents, you probably guessed it, volume value area lines is ID2. And if you go to the settings section, you'll see that SG2 is the volume value area high. So each indicator has an ID number and then a series of subgraphs that can be referred to using greater than, less than, cross from above, cross from below type language. It's very Excel-like. It's not that hard to learn the basics. So what you start to do is in your mind, you start to associate these things with subgraphs. So the point of control is SG1, value area high is SG2, value area low is SG3. This is not a language, Elliot. It's just, oh, the language, the actual application is, you can code it in C++ or something if you wanted to like really code your own stuff, but that we're not doing any of that here. All right, that is possible to do, by the way. But in this example, color background is a red background when the following is true. The CCI is greater than the upper CCI line, and the price crosses the value area high from below. In other words, the market is charging higher, and the CCI is getting overextended. That's when we get this notification. And then you see the whole thing is encapsulated with an and in front because there's more than one condition in there. There's some really good, simple examples on our YouTube page that I would like to refer back to. So if you want like a really simple one to use as a reference or a starting point, we have some really good ones. I'll link you to them in a minute. All right, now let's go to the other color background, right? So the color background here is the blue color. That's this one right here. What's the code here? Well, ID1.SG1, that's the CCI, is less than ID1.SG4, that's the lower CCI line, comma, cross from above, okay, the current price, and the volume value area low. So there's two conditions in here. The CCI has got to be crossing the lower line, and the market has to be trading down through the value area low for this to be considered valid. So, you know, it looks, I don't just type this out with my eyes closed, okay? Sometimes it takes me a minute. Okay, what's ID1.SG1? Then I got to go look at it, and then maybe I copy paste it into Notepad. It doesn't happen instantly. But when you start to just get the idea that, okay, wait a second, every indicator is really just a series of subgraphs, and I know how to type a greater or less than key on my keyboard, you can do this. So what the reason why this is useful is because it forces traders to inventory their decision-making process. We're not trying to turn people into red light, green light traders only. What we're trying to do is say, look, Mr. Jones, if there's 5 studies that you usually look at, and when all 5 of them are, you know, true, this condition is true, wouldn't you like to know that instead of having to look at all 5 of them for 24 hours a day? You know, that's the idea, is to get you to the decision point, the intuitive part, a little bit quicker. That is all that we're trying to do with this thing, not take away, you know, your analysis. So if you have a few things that you typically are looking for, like, look, hey, when A, B, and C line up, sometimes there's a good opportunity there. This is a way for you to notify yourself visually or audibly when that happens. So that's a good lesson, I think. It's a really cool part of the charting program. It's you know, something to consider, and again, you can use this as an example. Okay. Ken, there is a study called high-low for time period. So you can have like a high and a low automatically on the chart for, you know, time A to time B. So look for that one. It's called high-low for time period. Jeff says that a lot of the crossover formulas, et cetera, are on the Sierra help site and their message board, and they have a really good archive of that as well. That's true. Glenn, yeah, I did make a couple of similar things for order flow type stuff. I'll bring one of them up here in a second. I want to show a couple other things though before I do that, and I still want to get back to Fred's question about the continuous charts here in a minute. I made this other thing a while ago as a result of another webinar we did. This looks crazy, so let me just explain myself before everybody goes nuts. This is an Ichimoku Cloud scanner. That's what I call it. All right, so this is an example of really the lengths you can go to in Sierra. So the short version of what you're seeing here is, who's heard of an Ichimoku cloud? Okay, in the cloud, above, below the cloud, above the cloud. It's just another way of looking at things. So what I did was I used that color background study to notify me when the color is blue. Like, look at this S&P chart. All right, the market's above the cloud, so it's blue. Then when it's in the cloud, it's gray. Then when it's below the cloud, it's red. Okay, so you're seeing the color background. So there's 3 instances of the color background study on each one of these. Okay, color background based on an alert condition, and then there's an alert condition that I put in, right? Well, what I did was I actually created another chart and I overlaid the condition or the result of the condition onto the other chart. So I had to disconnect here because we're going into our maintenance period and I don't want this to keep trying to connect. So what you're seeing here is you're seeing this blue color overlaid onto this chart. And then see, before that it was gray. That gray is this gray right here. And then see, before that it was blue. That blue is this blue right here. And then it was gray, and so on and so forth. So what this thing on the right is what I call the scanner. It's a very crude, could look a lot better, but this is how I made it. And basically what it does is a visual representation of if the market that you're talking about is in the cloud, below the cloud, or above the cloud, and about how long it's been there. So some of our customers are like, okay, I only like to trade when the market is below or in the cloud because it looks like it might be breaking down. So if that's you, you would never even look at bonds because it's just been straight up above it. Or you might not be looking at the S&P because it's been above and then in and then above and then in, so maybe that's not your ideal scenario. So you can quickly look at this thing if you're into this type of trading and say, okay, there's a couple of markets here that might align with the way that I tend to succeed, and I can maybe avoid where I usually fail. So if there's a market that if you have a hard time going long, and the market is above the cloud, in the cloud, above the cloud, in the cloud, and you feel like there's a possibility that it's going to continue to rally, you might want to stay out of that product. Right? So this is, to me, a slight extreme example of what you can do with Sierra, but it's also a great example of what someone who's not a programmer can do, and that is create these conditions and then overlay them in a way that allows you to look at these 8 or 9 markets or so at one glance. So again, anyone who wants a copy of this, it's yours. All right. Okay. The other thing, Glenn had a question. There were a couple other very similar questions. If you go to File, Open Chartbook, there's one chartbook that comes with the download by default called Advanced Chart Types. Actually, you know what? That's not even the one I'm looking for. Forget that. Everyone has this one, but there's another one that's called Bid-Ask. Hang on a sec here. Oh, here it is. Bid-Ask Volume Analysis Chartbook. So this one everybody has as well. So Glenn, you had a question about this. There were a couple other ones. So this is an example of the color bar condition that we were talking about, where I've got order flow, numbers bars in here where I can see the bids and the offers, tons and tons of data. To me, this is like really hard to read. I made this only because some people wanted it. This one in the bottom right is similar. Same study with different graphical representation. So what we're looking at, Glenn, here, you and I talked about this a little bit, was the color background is based on the bid and offer ask volume minus bid volume reaching a certain threshold. In this case, when this value gets over 5,000, I want to be told. And then also conversely, when this value gets less than negative 5,000, I want to be told. So with this bar here, where it was negative 11,000 plus, obviously it's red. So what you can do with this thing is you can be notified when a series of conditions are occurring. It doesn't have to be that simple either. It could be, okay, when the bid volume is 5 times the offer volume, if the market is not going lower, that and all that volume is being swallowed up, that could be bullish, even though the bid volume is really out exceeding the offer. Conversely, if the market is getting hammered on the offer, but the market's not going up, that means that ask or bid volume is coming in to swallow all those offers. That could be bearish. So this doesn't really, this is as we've talked about, this is a very contextual way of and subjective way of looking at things. But if you're into the order flow stuff and you want to be notified when this, that, or the other is true, more than likely you can come up with something inside the program that can notify you when those conditions are true. Okay. More, I'm not sure about that. I would ask you, because now we're getting into tech stuff. I'm not exactly sure the circumstances where you can open that or can't open it. I know when you open up a new instance, it copies everything over from your data folder into the new instance. So there might be some, some things you have to do to make that work the way that you want. All right. Glenn, I hope that helps. And there was a couple other people who asked about that. Ken says, I am not a customer, but I will be after this. You have a lot of stuff I follow. Thanks. Awesome, Ken. That's great. That's the greatest thing to hear. Thank you. All right, so Fred had a question about the continuous charts. I'm going to answer that real quick, and then I think we'll probably take a couple of follow-up questions and then wrap it up here. I really appreciate everybody sticking around this long. So actually, let me stay disconnected here because we're still in our maintenance period. No markets are really open right now, so we can stay disconnected and still see the data. So Fred, rollover is handled on the program a couple of different ways. In the chart settings section, if you go to advanced settings, there's a continuous contract option. The most popular one that I use is called date rule rollover. That just means that the new contract begins when the CME's exchange rollover date occurs. So if I'm looking at let's call this a 30-minute chart, and I want to look at multiple, let's call it 90 days of data. This might take a minute to load here. Normally we'll go a little faster, but the GoTo software, weighs heavily on this as well. So when you're looking at continuous charts, you have a couple of different ways you can have this viewed. So continuous futures contract date rule rollover means that the new contract will begin when the CME's rollover date occurs. Volume-based rollover means the new contract is being shown when the volume in the current contract exceeds the volume in the prior contract. And then the volume date rule rollover back adjusted, these two options, what they do is they blend, I think, 14 days of the prior contract with the new contract so that you avoid gaps. This is most apparent in markets like crude oil, where there's oftentimes a big disparity between the current price and the prior price. Normally I use the date rule rollover option. Let me reduce this here to maybe 45. I'll go a little quicker. Okay, I haven't looked at a continuous crude contract in a while, so you know what? Actually, this may not download now because we're in this maintenance period, so we may have to table that one. But Fred, the crux of it is you have a lot of control over the way that the data is displayed. So if you want the data to be displayed only for the current month, you can do that. That's actually the default setting. If you want to have the data be displayed, in a continuous format where the new month is displayed based on the CME's calendar day, you can do that. If you want it to be based on volume, you can do that, okay? Okay. Sam, if you want to build a continuous contract, it has to be back adjusted for correct volume profiles. You can also set composite profiles, Sam, where you're literally starting the profile on a fixed date. That's another option that exists within Sierra. So if you want to totally eliminate that from the equation, you can also always use a composite profile that starts on a fixed date. And there's actually a video we just put up on the YouTube channel about how to do composite profiles too. Okay. The domes, Paul, do not change automatically. So we usually leave the old month up until it expires because we don't force people to necessarily trade the new month. You can trade really either of the old or the new months in most contracts that are cash settled. Anything that's deliverable, we're actually going to block the quantity. So if you're trying to trade crude oil in a month that's in delivery, we're not going to let you do that. But if you're doing, the S&P or the NASDAQ, that's cash settled, you could trade that literally all the way into expiration. So you'll have to pay attention to the symbol and the dome and the chart to make sure you're trading the right one. All right. Okay. Okay, cool. So a couple things. If anybody wants copies of the files, I would ask you to send an email to your representative. I'm going to email these to our entire office. Everyone will have it. We'll send you instructions on how to import them and how you can load them up. One thing you want to keep in mind is that my charts, I have lots of default settings in place, particularly with the time zones. So if you right-click and go to chart settings, if you're like in the East Coast, you're going to have to increase these numbers by 1 hour if you want them to be accurate. Okay, if If you're in West Coast, you're going to have to decrease these numbers by 2 hours. So be careful. I want to make sure you have accurate stuff. My stuff's in Central Time, so make sure you make adjustments as necessary, okay, if you do want that. Tom, yeah, initial balance is his own study. It's also part of all the profile studies. You know, you can do it on its own, or it stands on its own as a study, or you can, you know, it's part of all the volume profile and TPO profile, okay? Al, yeah, the time you won't set to, it won't automatically adjust. These are like these are not hard coded in there. It's not going to detect like your computer's time zone. It's going to use whatever has been manually inputted here, which in this case is my time. So if you're in the East Coast, you would need to increase these numbers by 1 hour. Okay. Yeah, Paul, if you want copies of the charts, just email your rep in our office, and we'll make sure that gets done right. Cecile, if you're pivot points, if you want them to be accurate, there's a video on our site on the YouTube channel that talks about how to make pivot points set up properly. The best way to do pivot points is to base them on daily charts. So inside the daily pivot study is the option to reference a daily chart that's open in the same chart book. Daily charts use settlement price as the close. It's really the best way to get the most accurate pivots. Every charting program does a little bit different, but if you really want them to be accurate, the best thing to do is to make sure you have a daily chart open in the same chart book. So if you add daily pivots, say, to a 15-minute chart, there's a choice in there to refer to the daily chart for data. Okay? Yeah, you can end the chart on the full hour. I mean, if you put the pivot point on an intraday chart and you have the pivot be based on a daily chart, it doesn't matter what your chart your start and end time is on your intraday, because the pivot point's not even looking at the intraday; it's looking at the daily. So if you really want the most people look at pivots based on closing as settlement. Daily charts use the settlement as the close. Argue how worthless settlement really is in many of these products that settle in the middle of the day and then continue to trade for like 2 or 3 more hours, just the way the exchange does it. All right. What I want to do now before we go is I'd like everybody to go to this site here, youtube.com/infinity futures. Okay. And I'll link everybody to this here. So if you go, let me put this in the chat. So if you go to this site here, you'll see that we have, if you scroll down, you'll see all these playlists. These are DOME videos. All right, how to use the DOME. Getting started with the charts. If you want basic stuff on the charts, that's where to go. All right, Sierra Basics, Shortcuts, and Essentials. If you're in this event, you should watch every video in this. You don't have to watch them all right away, but these are the kinds of things people who care about the charting want to know. All right, we've talked about a bunch of them here. Link charts by study, remember detaching charts, change the chart via keyboard, that sort of thing. Drawing tools. Automatically copy chart drawings from one chart to another. We talked about that. That's exactly the sorts of things you're going to find in here. How to do alerts on drawings. For all you profile people, TPO profile, bid-ask volume charts, there's a whole bunch of videos in there. How to split or merge profiles. How to make each letter have its own column. How to build a composite. We just put that up about a week ago. Jeff, I think you asked earlier about how to trade off the charts. This is a good, solid tutorial on how to do the chart trading properly. The custom alerts, see these background colors and stuff? This is stuff that everybody saw me demonstrate earlier. There are some really good examples here about different ways of doing the alerts. All right, there's some more examples here about study price overlay. Jeff M., you had asked about doing that tick chart thing where you can overlay the tick, the NYSE tick, onto an E-mini S&P chart. That's demonstrated right here. Lots of other examples. And then if you want full-length webinars that we've done over the last year and a half, there's a bunch of them on here too. There's about 50 of them. So there's a lot to look at there, and they're all titled pretty well. But we do work hard at maintaining this archive. We update it frequently, and we highly recommend you explore it. All right. In terms of where do we go from here? Well, the feedback is very important, and one of the things that we want to do is we want to make sure that if we're leaving, if there are things that you still need answers on, that we get them answered. Obviously, some of the questions for people who care enough to be here this long are very intense questions. Sometimes it takes a little bit for us to figure them out, but we will work at it. So if you have feedback, send it to your rep in our office. We'll all put our heads together and figure out the best way to get the question answered. And also, for those of you who are going to now go back to your trading buddies and your pals online or in person, make sure you let them know how cool this stuff is and how much effort we put into putting good content in front of our users and just trying to sell, instead of trying to sell them something all the time. This really is a great program. Infinity's been around a long time. You don't find a lot of brokerage companies where you have employees, brokers, who have been working for the company for 10 plus years. It's just not that common. It speaks to the nature of the firm, its management, our ability to handle stressful market situations. We've seen a lot of wacky things, in this side of the business. When I got hired here, as I mentioned, 4 years after I took the job, 2008 happened. That's trial by fire, and a lot of the people here, have been through it as well. So we've seen a lot of things. We think we have a lot of good knowledge to impart, and we certainly appreciate you telling your friends about what you think about what we have to offer. So with that, I think I'm probably going to close it up. I do appreciate everybody coming. Thanks for being so patient. We're going on 2 hours. Didn't expect that, but a lot of good questions, and really appreciate getting in front of people who really are trying to make this work. We know you guys are really trying, and we have no illusions as to how difficult this proposition is, that being self-directed trading. So thank you everybody for coming. I'm going to read some risk stuff here one more time. Probably going to close it up, and then we'll get this up on YouTube. For those of you who want to sit through another 2-hour presentation, you're welcome to do it. I will get this up on the YouTube page. It'll be, one thing while we're talking about that. If you want to be notified, subscribe to the YouTube page. Okay, so you can go to the YouTube page and subscribe. That way, if we put up a new video, you get a notification in your email or on your phone. So you'll get notified if you're subscribed, and then otherwise maybe we'll send out an email to everybody who registered with the link to the recording. Okay. All right. Thank you again for everybody, all of your time. Much appreciated. Again, tell your friends. We really appreciate that. That means a lot to us. Small groups. If you guys have a group of like 10 or 15 people, or 50 or 100 or 2,000, and you want us to do a little webinar just for you privately, we can organize that too. We really we're committed to making that work. So let us know if there's anything we can help you with. Okay? All right, folks. Thank you again. Appreciate it. I'm going to read some risk stuff here, and then we'll be closing up the room. Let's talk again soon. Thank you. All right, folks. Trading futures, options on futures, and retail off-exchange foreign currency transactions involves substantial risk of loss and is not suitable for all investors. You should carefully consider whether trading is suitable for you in light of your circumstances, knowledge, and financial resources. You may lose all or more of your initial investment. Opinions, market data, and recommendations are subject to change at any time. Past performance is not indicative of future results. Thank you again, everybody. Have a great night.